So first of all, let's start with the market breakdown before we do what we want to say. Or should I? Let me start what I want to do first of all before the market breakdown. Now, there's something I actually want to share with you guys, in which if you actually apply it, it's going to help you a lot. So now, what is liquidity in the market? If you're talking about liquidity, liquidity certainly means money in the market. So wherever there is money, that shows that there is liquidity in there. And again, how as a trader, where is our liquidity sitting? It is always sitting in our stop loss, in our pending order, in our execution, because that is where money is actually lying, right? So those are the liquidities in the market. Now, coming to chart now, how can you actually identify those type of liquidity level, right? I'm going to brief you guys for the sake of my students that actually pay for it, but I will actually give you guys a very good clue that's going to help you guys. Now, we have different type of liquidity in which I've already shared this before vividly to the community. If you have been attending our class for so long, number one, we have what we call the transactional liquidity. Okay. Number two, we have what we call the structural liquidity. Okay. And number three, we have what we call the inducement liquidity. So all these are the type of liquidity. Now, some of you are familiar, don't confuse yourself, right? Some of you are familiar with equal highs, equal lows, previous daily highs, previous daily lows. They are all still part of those things. Okay, just that the way we actually categorize them now is now like it's more simpler, more than how we actually know them as equal highs, equal lows, previous daily highs, previous monthly highs, and the rest like that, right? Now, do you believe with me that highs and lows in the market are actually a liquidity? And now, what make those highs and lows as a liquidity? Before I will delve into that, let me quickly explain this transactional liquidity. Transactional liquidity is basically for a reversal. Now, for a correction rather, let us assume market is on a downtrend, for example, pushing down, forming a series of a lower low and a lower high. So the new low that the market is making is a transactional liquidity. So once market take out those new lows out, so automatically liquidity has been generated. So we start looking for what a kind of a reversal pattern there for a correction again, right? So the same thing, this loan and this new loan have become another word, transactional liquidity, in which whenever market is coming back to that level next time, so we have to focus on that level again and see what the market is doing from there after taking this transactional liquidity. So after transactional liquidity has been taken, we always expect a kind of a reverse, right, or a correction from the market. Okay, that is basically what transactional liquidity is, right? So now for the structural liquidity is also very simple. You know, let's say the market is actually coming down. Structural liquidity is always for a continuation, right? A continuation trade. So if a market is giving us a series of a lower low and a lower high, so for them to respect this high, right, there must surely be a liquidity they take from here. So that liquidity that they actually take from there, right, before pushing to the downside is known as the structural liquidity. Okay, is known as the structural liquidity. So that liquidity now, it can be an equal high, it can be whatever thing it is, but just know that structural liquidity is for what? Is for continuation. I won't say more than that. Why inducement liquidity is for expansion, right? Inducement liquidity is for expansion. What do I mean with the word expansion? It's very simple. If you are the one drawing on my screen, I saw my life, I'm going to remove you. So now for the inducement liquidity let us assume market has been coming down, forming a lower low and a lower high, like that. Now, there's what we call the structural liquidity. If a market does not have a structural liquidity within it, right? If a market does not have a structural liquidity within that level, automatically that high that is there will become an inducement for them. So they will surely take that high out as an inducement liquidity to be going down. I repeat myself. If this high, for example, if the high, number one, if the high does not sweep a level to create that strong high for us that is going to be respected, and as well, if that high does not have a structural liquidity within it, this high will always be rated for an inducement generation to the downside. Okay, so vice versa, the same thing applicable to for a buy trade as well. So it's very, very simple and straightforward. Now, the main thing I actually want to talk more about is inefficiency price action that most of you actually know as imbalanced price action. These are also part of the reason what drive the market to take to actually induce people out before the main trade is going to happen. Okay, that is what actually push the market before the main trade is going to happen. Imbalances, and the way you actually understand imbalances or inefficient price action is not the way I'm actually using them. Now look at the way it is, right? Now let's assume we actually have, I always use this kind of pattern 1, 2, 3 as an example. Let's say we have something like this: 1, the first push 1, right? The second push is 2. Now this third push now that is coming up for a correction, if it does not mitigate this first push, that is, if we do not if we do not have an equilibrium level within this level, that should, for example, if the market continue going down now, right, without giving us that equilibrium level, anytime the market is coming back to this area again, note, always be careful of this zone, because of why there is still an inefficiency price action above it. So the market have a higher possibility to induce this high to tap into this level and continue going down. So you always have to be aware of those kind of level and be careful about it. Whenever you're actually taking a trade, no matter how good this high is, in as much you already notice that there's an inefficiency price action within day, right? Always know that markets have a higher possibility of inducing that level to tap into that inefficiency price action, except if that inefficiency price action is no closer to it. If it's closer to it, there's higher possibility for the market to induce that high. Now, I'm going to go in depth on this, in which I'm going to give you clear example and clear view of it, right? The same thing, let's assume in the previous time that price already play out like this. Let's say you look to your left-hand side. Let's say to your left-hand side, you actually have, okay, let's say you actually have this kind of inefficiency. It's going to clear, but let me draw something for you. So now this is how we take a kind of a correction trade. Now let's assume, looking at your left-hand side, you already see that previously before, there is also an inefficiency within this area, because if you look at this first move, second move, third move, there's a kind of a gap between them, right? So there's a kind of a gap between them. So that shows that that is a what? There's an inefficiency. So next time the market is pulling down to that level, even after clearing this low, note that this low is going to be a liquidity for you. Now, after they clear this transactional liquidity and they fill this level here, then if there's any confirmation there, you look to go long from there. It's very pretty simple. But don't forget the overall direction of the market now, because we are still bearish. This is going to be a corrective trade for you, then to continue again. So if there's any structural liquidity there, then you look to go short again. Are we on the same page? Are you guys feeling me? Kindly drop some emojis if you're actually feeling me before I continue. Are you guys in there? So kindly drop some emojis if you can hear me very loud. Okay.
We dey follow.
Now let's proceed. Now let's look at examples. We don't have much time. Let's look at clear example of what I'm actually talking about. Someone said I should kindly amplify my voice. Is my voice so low? Oh my goodness, I'm sorry. So now, let's look at clear examples now, without wasting much of our time. Now, if you look at this level here, let's start with this, from this area. Okay. Now, if you look at this area now, why do you think I'm actually expecting a sell on this good here? Before I proceed, I will show you more example rather later. But now, if you look at this area, why am I actually looking for a sell around this area? If a market approach this my trend line to touch, you see, there's nothing that is actually waste in market. So why am I going to be looking for a sell? Because of why there is still a what an inefficiency price action there. If you look at this, let me use 1 hour so that it can be more clearer. If you look at this level, that the market make, this push here, right, and this push here. Let's say these are first candle push, second candle push, right, and the third one. Let me use something to do it. The first one, right, second one, the third one. So there is what the market did not make a what an equilibrium level there. So there's high possibility that whenever market is coming back to that area next time, the market should actually read this high out. There's higher possibility for them to read that high out. Now, that is why I'm actually looking to take a sell around that area. Now, look at clear example of what I'm actually talking about here. Look at this here. If you look at this level, why did gold actually sold from here? Now, this is where most of you actually are making mistake. For those of you that will be looking at this high as a what? As an Asian high liquidity, right? Now look at the market. Now the market did not take out the Asian high liquidity. Why did the market not take out the Asian high liquidity? It's because of why markets already approach this what inefficiency price action here. This is the first move. If you look at it, first move, second move. Now the market have not tapped into that what into that level here to feel that inefficiency. So in as much that the price does not feel that inefficiency, this new high that the market created here now, this new high that the market created here now, let me use my pen now, sorry. This new high that the market created here now is going to be a liquidity zone for us. Now, immediately market take out that liquidity out. Now look at the way the market push all the way to feed that inefficiency. That is where you start looking for a way to scale in your sell. I hope you guys can hear me loud and clear. It's very, very pretty simple. Let's look for more examples. Pray the time actually permit us. This trade was not kind of clear, but also based on that as well. This is what I was explaining to you guys as a structural liquidity. Now look at the first move here. Sweep of this high, market break is structure, then this high now become a liquidity zone for you. Now look at the market, taking out that high, then tapping into this level to the downside. Right now, why do you think I actually consider taking the trade from here? Because the market already give us an equilibrium level here. So there is no need for the market to continue going up from there. You understand? So the same thing here. Let me give you more clear examples as well. Okay. Now look at this level here. Why did the market actually bought from here after all the way retracement? Because of the equilibrium level here. Once the market already approached that equilibrium level,
Sorry, what do you mean by equilibrium level, please?
once inefficiency has been filled, okay, once imbalance has been filled, that is what I actually call it. Are we clear? So once they already feel that inefficiency there, then market has a high tendency of actually pushing up. In as much the structure is still very, very intact. Okay, in as much the structure is still very, very intact, they have the higher possibility of going up from there. The same thing happens also here. We also have the same thing here on a more lower time frame. Let me show you guys something there. Okay. Now look at the market here. Why did I considering taking this sell from this area? It was also very pretty simple. Now, if you look at here, right, it was actually still based on what I actually told you guys earlier before. So any liquidity, any inefficiency price action that is closer to your level, don't ignore them. They are like that is the area that market is going to use, right? Now look at this area now. Let's say we have the first push. Let's say we have the first push from here, right? The second push. Now look at the third push. You see, it does not mitigate this area. So that shows that there's still an inefficiency within here, within this space. So that shows that this high now, this new high that the market make is going to be my liquidity area, clearly. So once market take out that liquidity area to fill this inefficiency, I'll start looking for a selling opportunity. Now let's look at it, how it's unfold. Now look at here, very pretty simple. Look at the market after playing around for like how many times? Look at it, they already feel that inefficiency. Now, what is next for you? To just wait for your price delivery. Now look at the price delivery. There's already a shift in structure and everything. Liquidity, a new liquidity has been created for an entry criteria. Then you can take your trade from there. Very pretty simple. Now, with that, now in as much there's already a shift in structure here, you will have higher possibility of taking the trade here because of why the inefficiency here has been filled up. But assuming there's already a break of structure here and there's still an inefficiency here that the market is actually that we're actually still expecting the market to push up to, then there's higher possibility for them to sweep that high to tap into that inefficiency before the down push. But in as much they already feel that inefficiency, then we don't have any need of going up again. So they need to make use of this one. Then the next inefficiency that we are going to have is around this area. So next time, don't forget, like everything is one at a time. Now look at this one now. They have not made use of this one. Next time the market come out to this area, I'll be considering my shorting around this area again. If there's also a clear confirmation for me, then I'll be looking to take a sell from there. Look at here as well. The same thing happening here. Now, if you look at here, this push, there's already a change of structure here, right? This push, first push, the second push, the third push. Now look at it. This first push and this third push does not give us a what? Does not give us an efficient price action. So that shows that there's still a what? Inefficiency between them. There's still an imbalance between them. So now this low automatically become my what? Inducement liquidity level. So now market is still bullish, breaking of structure, right? Higher high, higher lows, higher high. Now market coming all the way down to take out that liquidity level, then filling that inefficiency, then you can take your trade from there. Very pretty simple. Are we clear now? You still need more evidence? Now let me, I think I still have two, exactly. Now look at here, with what I explained earlier when I actually started it. Now if you look at here, let's look at this area. Exactly. Now look at this area now. Market giving us that kind of vibe. You see, it's not a coincidence something. First push, right? Second push, third push. This first push and third push, they did not mitigate each other. So that shows that there is what? There's an inefficiency between this zone. So this low become automatically a liquidity level for us. Now look at what happens from there when next time markets come back to that level. You see, it is not a, look at it. After playing around, you see, they surely still feel that what? Inefficiency. And after feeling it, look at what happened from the market continue going. So anyway, this is where I'm going to stop my teaching and we'll proceed to our market breakdown. The same thing happened here if you can see it. A, B, there's no inefficiency there. So the price has to come down to feed the inefficiency that is there before the market proceeds and continue going up. Very simple. So it's not pertaining to gold alone. You can see it in other pairs as well. So now let's just proceed with our other class. If you have any question, you can drop it on the chat box, but let's just sharply look at what I'm actually having on my watch list. First of all, let's start with the XY. The XY, I'm still expecting more buy on a higher time frame. But in a lower time frame, we can still sell the XY for a while. Now, this is what I'm actually talking about. From daily and also from weekly time frame. If you look at the XY, now look at the daily time frame charts. Looking at the XY, look at what the DXY is doing. So there's still high possibility for the XY to push all the way up, in as much we still have inefficiency here. So there's still high possibility for the XY to push all the way up, even from the weekly, what I showed you guys just now. You see the way the momentum of the XY is. The momentum is still very, very strong for the XY to push up, right? They see a kind of a higher possibility from there. So now, we already know that, okay, the XY, we are still expecting overall direction of buy. But for now, how are we going to, scaling down to our lower time frame, we see that, okay, the XY already give us a lower time frame change in structure, or change in direction, a lower time frame change in structure, right? So now, there's high possibility, I'm already on this short with my inner cycle. So there's high possibility we mitigate this area before the major buy to the upside. So if that is the case, then automatically we are also long on EU. Last week, I think we are on EU on Thursday, right? I think it was the same day we are on EU. That was the same day I sent you guys the GU, but GU did not tag us in. So if that is the case, that should that dollar cross pair, that is anything related, like that dollar is the second one, like anything that have something like this, dollar. What are we going to be looking for? We are going to be looking for a long before short. That is my own analysis. Your own may be different too. So, but this is what I'm actually looking at. Now, let's look at EU and GU. Now, looking at gold, for example, now, if you look at gold, with what gold is doing, there's high possibility for gold. Look at what gold did from here. It also mitigates that equilibrium level, what I just taught you guys just now. It mitigates that inefficiency price action. So gold have the higher possibility of also pushing up. Since our DXY, we are expecting the XY to push down before the massive buy. So we are expecting the gold as well to push into this level before the sell-off. Because if you look at the overall direction of gold now, it's as if we are bearish already, forming a lower low and a lower high scenario. So there is possibility we sell off as well, but I'll be expecting my own sell around this area. That is what I'm having. So by so doing, that shows that the XY would have been ready to buy by that time. So the same thing applicable to my GU. Let's do dollar quote pair first. The same thing applicable to my GU. GU already sold from here. Now look at why GU sell from here. Some of you will not understand. It's because of what I taught you guys just, and because of the inefficiency price action. Look at the way they give us that inefficiency equilibrium there. So GU sold off from there for a retracement. So there's possibility for GU as well to take out this high before we also sell, before the massive sell to the downside. That is also what I'm expecting from GU area. I'm also expecting GU to take out this high to sell. So the next one as well is EU. EU, I'm also long on EU. Since on Thursday, we are already long on EU. So now on EU, I'm also expecting them to at least fill this area That is where my major TP is on EU. So if they should fill this area for us, then we look for a way to sell as well. If the XY is also ready. So this is what I actually have on this pair: gold, GU, EU. Now coming to USD CHF, right? USD CHF as well is also the same thing. I'm looking to short USD CHF. USD CHF already giving us that vibe of selling opportunity. We are having that vibe already from day on selling. So if it retraces, right, on 15 minutes, if it retraces, then I'll look to take a selling opportunity, like a selling advantage from there. That is what I'm expecting. So that is what I'm actually expecting. If it should retrace up to this level, then I'll be looking to take a sell. But before that, I'm expecting a massive break. If they should break to the downside, then I'll be expecting to take a sell on this USD CHF. That is what I'm expecting from my own end. That is what I'm expecting. If you look at the 2 hours, like the momentum is already there. So there's higher possibility we also sell off since the XY is also coming down. Now, USD CAD as well. USD CAD has also been selling massively. USD CAD has also been selling. Now, look at USD CAD. The same thing I taught you guys just now. So for those of you that have, that really want to use it, you can backtest it and make your own and see what I actually taught you guys just now. If I'm actually capping, if Hak is actually capping, or is the real deal Hak is sharing. Look at it. There's an inefficiency price action here. That price has not mitigated. Immediately they mitigate that level. What happens? So this has become a liquidity for them. After mitigating that level, now what happens from there? It has been selling massively. So how I always trade after how I always take my trade after we have that kind of thing, I always wait for a price delivery. So a price delivery simply means scaling down to like something 15 minutes or 5 minutes, looking for a shift in trend and expecting the same thing again for a liquidity grab, a structural liquidity. Then I'll look to short. Then the new high that they create will now be my stop loss level. That is what I always do. Now, looking at this area now, right, since I'm still expecting more sale, then I'm expecting USD CAD to, if it can actually give me a kind of a retracement up to this level, then I'll look to short again from there to the downside. Okay, why I'm actually looking to sell from there, because there's no any inefficiency around this area. Everything is balanced, everything is efficient, right? So I'm just using liquidity and structure to trade it. If they should retrace up to that level, then I'll be looking to take a massive sell to the downside. That is what I'm also expecting from my own end on USD CAD. Then the same thing applicable to Euro CAD as well. Euro CAD, I'm on this sell since last week as well. I'm also on this sale from here. So it was also based on the same thing I taught you guys. Structural liquidity was taking change of structure, everything very perfect. Then we take a sale from there. So now I'm expecting them, if they can retrace up to this level to take out this high, giving me this kind of vibe, I'll be very, very happy to take a sale from there to the downside. I think that is all. Then Odd Chef was the last one I also have my eyes on. But for Odd Chef, I'm looking to go long. Now, let me show you guys why I'm looking to go long. And you guys will share your own idea with me. Now, look at it. Let it load. Okay. Now, they've already grabbed a liquidity this level, this low. This low has already been taken out. Based on what I taught you guys just now, a structural liquidity has already been taken out, right? After they take out that structural liquidity, which was here, then we saw that massive push and shift in structure already occur. Now, what I always tell you guys, you move to a lower time frame, a more lower time frame, to look for entry criteria. Now, on my lower time frame, I identified this level here, this level of liquidity area. So I'm hoping that USD CHF should give us something like this, take out this liquidity, then tap into this area of inefficiency and also a key level, then we look to go long from there. But the risk is high anyway. The risk is very, very high. I don't trade with this kind of stop loss. It's too big, 38 pip stop loss. So anyway, but that is just for that. that is all I actually have my eyes on for now. So now, if you have any question, feel free to drop your question. We only have like 6 minutes to go, so I'll use the remaining time to attend to the question. Thank you very much.